Hello, Maverick traders. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma, and this is the Currency Room, and we are already past our first week of August. So let's jump into last week's market. Now, we had a call that the markets were likely going to consolidate in these areas, and sure enough, that's exactly what they did. The markets, had runs up, runs down, and at the end of the week, it basically closed where it started the week. We did hear from two central banks. We heard from the RBA. They came out and, as expected, raised rates by 0.5% or 50 basis points. On that announcement, though, the Aussie actually fell fairly substantially. They were not as hawkish as the market thought, and so we saw the Aussie come down off of that. Then we heard from the Bank of England on Thursday. The Bank of England also raised interest rates by 0.5% as expected. And one of the new things that we heard from the Bank of England is they are forecasting that the UK will go into recession in the second half of 2022. That's really the first central bank that has just come out and blatantly said, we expect our economy to go into recession. And again, the pound had a little bit of trouble on that news as well. And then, of course, on Friday, we had the US and Canadian employment report. And you can see that the US employment report was phenomenal. It blew the estimates out of the water, 528,000 jobs, 3.5% unemployment, which is the best in 50 years. And we had wage growth 0.2 hotter than expected at 0.5%. So that right there, I think, has changed the narrative a little bit and changed the story. And we'll get into this in a second, but I really think that Friday's data is going to potentially change and turn the direction of this equity market. Of course, that is me just guessing and prognosticating. We're going to need to see it in the charts before we do anything different. We also got the Canadian employment report, and it was not good. It was not good. Lost 30,000 jobs instead of gaining 14. But again, their unemployment rate is quite low historically speaking. So let's take a look at all the numbers and let's see where we settled out last week. If you take a look at this chart on the bottom right, you can see that, the numbers for the markets, gold and cryptos, they're all pretty small. And then you see this one huge thing, oil. Oil got absolutely killed last week. We had some production increases. We had some supply that was much higher than expected, and oil tumbled down below $90 a barrel. So the energy sector in stocks all came apart. That was really the only big weakness that we saw last week. Last week was really just more of a consolidation week. So you can see SPX, VT, all about flat. Crypto, a little bit weak. Gold, a little bit strong, but oil, that's the big story there. So let's take a look at the chart. And if you take a look at this chart, here where I just showed you this band here, you can see that this is the area we said we think we get up into this area, but we stall out. And that's exactly what's happening here. We're stalling out. Now, look, that doesn't mean it has to fall. Stalling out can be consolidation. It could go flat and sideways for a while. But we're in this area where we did expect there to be some trouble for the equities to go any higher here. Now, we'll get into what our outlook is going forward. But just for last week, really it did exactly what we thought it was going to do, where it just stayed in this band here. We take a look at what happened in foreign currencies. One of the things that we've been talking about in our daily roundups is the dollar-yen negative correlation going on right now. And we're going to talk about this for next week because I still think this is the best trade. I thought it was the best trade last week. I think it's the best trade this week. We always want to choose the most negatively correlated currencies, the strongest versus the weakest. This week, again, it was dollar strongest, yen weakest. And if we take a look at this in the middle of the week, the first 2 days of the week, this was the opposite. The yen was strong and the dollar was weak. And there was fantastic moves for the first 2 days of the week. It flipped. And for the last 3 days of the week, it was an enormous move to the other side. We think that this dollar-yen negative correlation is really going to stay. And I think this is where you're really going to want to focus most of your efforts here. We did see the euro get a little bit of strength. But outside of that, you can see everything is pretty flat. And when we get into the charts, sadly, this is the market we're seeing right now. The markets are really flat at the moment outside of the dollar-yen correlations. We go over to crypto. Crypto had a fairly mixed week. Litecoin was up, Ethereum was basically flat, Bitcoin down a little bit. So look, I'm going to call this a mildly negative week for the cryptos. So let's take a look at where the market is going forward and our outlook here. Now, on a technical basis, we must be at a +2. Maybe even a +3, but a +2 for sure. If we clear out of this band of resistance, then you can go to a +3. But until then, you really can't. So here we are, we're in this area, and potentially, I think we were going to have a little bit of an uphill battle to go higher. And I actually think there is a little bit of momentum for us to have a decent pullback here. And we could even pull back all the way down to the 4,000 area and still be just fine in an uptrend. Now, I'm not calling for a drop to 4,000 next week, but I am calling for a risk-off move. I do think that jobs report was too hot. And we saw the bond yields all jump up and the stock market fall down. And it's just telling you that people made a bet that the Fed wasn't going to be as aggressive. And now they have to take that bet back. The last 2 weeks have been all about the Fed being less aggressive so people can buy equities. Now they're looking at that number saying, oh boy, maybe we jumped the gun. Anka, what's your call here on equities?
Hey, Rob. Well, I do agree on your thesis there. I think the markets have actually been front running the Fed. I mean, this is the kind of theme we've seen all year, where when the yields were rising, and then you have some bets going in about very hawkish Fed. Now, in the past 3 weeks, we have seen a different narrative, and again, that we can see that in the dollar as well, where the dollar hasn't really been able to get that lift. Today, that jobs report, that was very bullish the dollar. So outside of the equity markets, I mean, we're getting a classic move in the other markets. We see bond yields, they're actually up quite aggressively. We look at the dollar, most of the gains in the dollar was actually on today's gains. So we are seeing the similar story to kind of play out again, where I think we probably just have this resistance kind of still hold on to it. And either we see a consolidation or slightly pull back. But I think at this point, there's higher risk on a breakout than a pullback. So I think the next week, I do agree. I'm more on the consolidating to a pullback side. I only want to get bullish if it gets above that resistance. So for that, we need to get that confirmation. So I think at this point, it's a bold call to kind of go break out, but I think it's a higher probability for this to pull back or even go lower. So I think the next week will be a good test. If the market tanks on Monday, I think that'll be a confirmation that was the high for now. And we probably head towards the lower band of that chart. So that's what I'm looking at next week, Rob.
And Ankit, I think that's a great call for a Monday to really take a look at where Monday closes and see where we are. All right, well, let's take a look at the VT. VT, the world index, you can see that we have not made a higher high than we were in June. We're still much, much weaker. We are above the moving averages, but that's about the best you can say. So we're still seeing outperformance in the U.S. markets, which again is another reason why that dollar has been so strong lately. And if we come over here to take a look at cryptos, this is our crypto basket. And we talked about there being a very, very slight uptrend channel here. And here we are at the bottom of the channel. Look, I don't love this as a trade. It is at the bottom of the channel. I just think you need the equity markets to go higher to pull these cryptos higher, and I just don't think you're going to get that. So for me, I am just really not all that interested in crypto at the moment. Let's take a look at our schedule next week. After a very, very busy this week, I mean, we had so much news this week. We're now going into a little bit of a lull of a week. So the markets are sideways. And we have a week with not a lot of news out there. It's another confirmation that maybe this week isn't going to be the greatest trading week we've seen lately. And we've seen some great trading weeks lately. I think this next week is going to be really not so great. If you are looking to trade some news, this CPI on Wednesday is going to be the fireworks. This is going to be where the big move is off of a news report. And as you can see here, they're looking for a 0.2 headline number, 0.5 core number. Now, things did come down quite a bit in June. We did see oil come down quite a bit, commodities come down quite a bit. We'll see how much of an effect that had on the CPI. On Friday, we do get GDP out of the UK. That one will also be moving the pound. So if you are trading pound, make sure that you are watching this number on Friday. So next week, we've got the markets are probably more likely to pull back than anything, but we don't think it's going to be a really big, nasty pullback. It's probably just a drift lower while people are thinking about what they want to do with this new news from the Fed. We don't hear anything from central banks, and we've got that US CPI report as the big news. So let's go ahead and jump into the currency analysis. Let's take a look at Bitcoin first. So you can see here we made a slightly higher high. We've just been drifting down, drifting down. Here we are. This candle is not all that great. Long upper shadow, not the kind of price action you want to see. So I'm going to look at Bitcoin and say, you know what? It's definitely not showing me it wants to go higher right here, right now. Let's skip to another one to see if we can identify which crypto is going to be the stronger one. Here we have Bitcoin Cash. Bitcoin Cash had a really nice run 2 weeks ago, and it's pulling back. This looks better than Bitcoin does, not a whole lot better, but you can see at least we've made 3 attempts here at a bounce or at least a bottom, and it's actually holding up okay. So Bitcoin Cash at this point is better than Bitcoin itself, but let's take a look at Ethereum and Litecoin to see if we can find actually a better one. And here we have Ethereum, and you can see a little bit better price action. We broke out, we came back, we tested this support. This is a much better candle. This is a much better candle than the other ones. It's showing us that the momentum is coming back into this one more than the others. And this one is at a +1 where everything else really is at a 0. And into Litecoin, you can see Litecoin here actually has 2 candles here. We broke out, we pulled back, we put out 2 candles. So of all of the cryptos here, I'm going to have to say that Litecoin actually looks like it has the most momentum to the upside. That being said, I don't love cryptos here. The uptrend is so shallow. There's just not a lot of money to be made here in this really shallow uptrend. And I just think, we get any sort of bad news, something goes wrong in Russia or Ukraine, we could easily have another 10% tumble in a day. I just don't think the reward is worth the risk on cryptos here. Let's take a look at our foreign currencies, starting off with the dollar. So dollar broke briefly below its 50-day moving average. It popped back up, spent 2 days there, and then Friday had a really strong gain on Friday. You can see most of this came off of the report, and then really just didn't do much after that, just went sideways and faded off a little bit. That being said, I think you've got to put the dollar back up at a +1. It's mildly bullish on a daily chart, but more moderately bullish on an intermediate term chart, where, right here, right now, if I had to look to go long or short dollar, I'd have to be long dollar, even though it's not really showing a ton of momentum at this point. I'm going to let you cover Japanese yen here because I think about 2 weeks ago, I said to myself, hey, you know what? Just don't try to figure out the yen. You don't have a good hold on this. So I've backed away from trading pretty much any yen crosses until I feel like I've got a better outlook. So do you want to take yen here?
Absolutely. And, yen has been like the most interesting and even challenging currency to trade because there have been many times when you expect the yen to strengthen and it doesn't. And then the other times, like we have just a week ago, we had the U.S., the FOMC, but the yen was really the biggest mover off of it. So one of the things that I did talk about last week is the bond yields. And the bond yields have actually come very aggressively lower for the Japanese yen. If you take a look at the 10-year bond yields for JP10Y, now that actually has pulled back much lower where it was early back in March. Remember, back in March, that's when the Bank of Japan came out and they actually set the ceiling for 0.25% as the new ceiling, and the yen's continued to kind of rally since then. But now those are come off. So the yields are kind of telling me a mixed picture. Either the yields are pulling back off because now, we were expecting maybe Bank of Japan to make a move, or we're just seeing a bit of an early precursor of maybe what's supposed to come with the yen. So I think yen is likely to be staying in that zone. So I'm no longer in that bearish, ultra bearish camp for that reason. I think if the yields kind of go back up for that, so I think that's where the Bank of Japan will then have to print more because they have to keep defending to 0.25%. So the fact that they're coming back off and they're back to almost close to March lows, I'm actually going to take an opposite side of it and rather look for to buy the dips on the yen. So I know it's a bold call, but I think what we need to kind of take a look at is what the dollar does and what the yen does. And there's a negative correlation there. The past week, the dollar pulled back and the yen actually rallied. So the question is, if the yen rallies next week, can the Japanese yen also rally with it? Or do we continue to see that negative correlation? So I think it's an easy call right now. If the dollar is outperforming, go with the dollar pairs. But if the dollar is underperforming, I'd rather go with the yen pairs. But I think what we really need to watch out for is those bond yields. It's the same way as we can look at the 10-year bond yields for the U.S., and we can actually see today's number has actually got those yields back up, which means that now they're looking for more hawkish tone, and that will actually help the currency. So I think we have to really pay close attention to those bond yields to kind of find out what the currency is going to do. And meanwhile, the volatility is pretty high on the yen. So I think if you're looking for velocity, doesn't matter which way it goes, you're going to get a nice little move. Then those moves might not last. I mean, today we are seeing a big move in the yen to the downside, but again, this move can easily reverse. So I'm actually very open to trade yen on the both sides, where this is a big change because in the past few weeks and months, we have been actually just looking at yen on one direction. So that's my outlook, Rob, and we'll have to see what happens next week. And based on that, we either pick the yen or the dollar.
I think you're exactly right on whatever the dollar does, the yen is likely to do the opposite. I think that's a great analysis on yen. All right, let's quickly move through Swiss franc because you can see on the daily chart, there is nothing going on. There's been a very, very tight range. Until it breaks out, I don't even want to take a look at a trade. I don't even want to have it on my screen because it's a trap. Look at all these long upper and lower shadows. Anytime anyone took any trade on a sign of strength, it lost it. Or went short on a sign of weakness, it lost it. So just take it off your screen. Euro going into last week was my favorite short, and I said I'm waiting for it to break down, and it never did. Just never did. You can see long lower shadows down there, but it just never broke down, and we actually had a little bit of a bounce. I'm still liking Euro short, but in the short term, it's got a lot of momentum to the upside. So I'm definitely not looking at Euro short at the first part of next week. I will check back in on Euro short after this little bear rally is done. We talked about the pound last week, looking like, okay, where is it? It's up at the top of this range, right at the 50-period moving average. Can it break through? You can see we had a couple of blown attempts, and then we got the BOE, and it came down, but you can see we had some buyers there. This is a mess. Whenever you see a stock like this or a currency like this that just has these kind of candles, just go away. Just go away. When you're trading, you want these kind of candles. This is an easy trade. This is a hard trade. You get to decide, do you want an easy trade or do you want a hard trade? And right now, pound is a hard trade. So for me, I'm going to put that on the shelf with Swiss franc, and I'll just come back later to try to figure out what pound's doing. Right now, no clue and no desire to figure it out. Coming over here to the CAD. Okay, so CAD, we are seeing a little bit of similarity to the dollar. It's pulled back, but it has been a little bit weaker than the dollar. Here we are, we're basically right between the two moving averages, slightly bearish, but nothing going on. Take a look down here at the velocity score. Nothing going on. So we try to avoid at Maverick trading things that aren't moving. As a directional trader, you need things that are moving. If you can clearly identify that it's not moving, don't trade it. So we will check back in on the CAD later, but for right here, right now, nothing going on.
Hey, Rob, I just want to quickly chime in for the CAD there because, I talked about this early this week in a Canadian dollar outlook video. I mean, one thing we do see over here is that the Canadian dollar basket has actually gone below the 50-day moving average. In the past, we got a nice little rally up to the 20, and then we pull back. If this stays on that trajectory and actually pulls back further, so Monday would be a good test. If this actually pulls back further, I actually like CAD more to the downside. And again, I think the CAD has actually done a great job this year, being very bullish among the growth currencies. One of the things that we also noticed today, again, we have back-to-back 2 negative jobs report out of Canada. So things clearly don't look the same as it is in the U.S. And then we also got the PMI numbers. So Rob, I don't know if you pay attention to the IV PMI figures.
Yeah, I saw they
we
were
actually
terrible.
came out at 40. They were terrible, 49.6 versus 60. So that was the biggest, that was the negative number below 50 we have seen since January 2022. I mean, so this year, that's the weakest PMI figures that we can get. So if I have to take a look at deteriorating economics, or deteriorating numbers, and if we actually get the currency that's sitting at such a nice premium, I think there's more risk for the CAD to pull back. So I am actually, right now we have bigger bets for the Fed to raise rates. I think now these bad numbers are going to put pressure on Bank of Canada to not be that aggressive, because remember, they've been raising rates way faster and way more than any other central bank. So I think it's a unique opportunity kind of coming ahead. So if you're looking at CAD, I mean, I think this is a bit of a last test for the CAD. If we can actually rally back up and get above that 50-day moving average, I will back off from my bearish outlook. But if we stay below that 50, and again, today's price action, if that reverses on Monday and we stay below it, I think we can easily see a further pullback in the CAD. And actually, we can actually take a look at dollar CAD as a great pair to take a look at, because finally we are seeing the Canadian dollar could deviate from the dollar, from the US dollar. I mean, those two things have been very positively correlated. Remember, we're looking for negative correlation. If I can see a negative correlation come in play, I think that will make a great opportunity for dollar CAD. So something I'm paying attention to next week. But again, we need confirmation to confirm that outlook.
And one thing I do want to point out, all of your logic was sound. Here's the problem. CAD went up on this. CAD went up on a bad employment report and a bad PMI report, and it still went up. So I think you want to be, like I said, I think you're making a lot of sense. I think if you read an essay on that, you'd get an A+. But the price action to me is telling me, do not get too far out over your skis on this one. When bad news happens and something goes up, it's kind of telling you it wants to go higher. Look, I don't think CAD's going any higher. I don't think it's going to rocket. But I'm not seeing the demise of the CAD here just based off today's price action. When you got lousy news and it still goes up, that's a warning sign to me. Right, here to the Aussie. We had a run up to, just take a look at what's happened to the Aussie. We were up above moving averages, we fell. We were down below moving averages, we rose. So here we are, we're in no man's land. And again, these two candles are just nasty candles. Long upper and lower shadows. Anyone taking any sort of trades on a breakout or a breakdown, you got stopped out for a loss. Until I get a better move out of Aussie, I'm just not interested in it. So it might be in play later next week. It might be in play later next week, but I'm just not interested in it early on in the week. Here we are, Kiwi. Look at these candles. I have no desire to play with currencies when they're doing this. When they're moving, that's when we want to trade it. When they're trending, this is when you want to get in. Here, this is just a mess here. So Kiwi is just a 0 and a 0 across the board. So if we look at all of the currencies, base them on the relative strength of their trends, take a look at pretty much everything is between +1 and -1, which is really trendless. Yes, we have +2s on Ethereum and Bitcoin, but a very, very mild +2. Like you saw that channel, it's a very mild uptrend in crypto. So really the only thing we've got is Euro at a -2. And when we take a look at velocity, look at the Euro. It's actually showing the most velocity outside of the dollar. This is a mixed picture here in a tough market. This is a time where we trade less as a firm. So when things don't look great, when things aren't moving, we just scale back the number of trades. We do half positions. We just scale back and we just wait until the market becomes a better market. We are in the middle of August. August is traditionally the lowest of the volatility months. We expect there to be much better trading activity come the end of August and the beginning of September. So it might just be that we have 2 or 3 weeks here where we just don't have real great trading opportunities. And as a trader, it's really important for you to identify those points, because these are the points where people lose a lot of their gains. They made good money when the market was trending, and then the market doesn't trend anymore, and they keep clicking buttons, and they can't figure out, hey, everything I was doing in July was working, and everything I'm trying in August isn't. Nothing is wrong with your strategy. What's wrong is the market is no longer conducive to trending trades. So if you are going to trade, I think what you look for is range-bound trading. Range-bound trading is fairly boring. You don't get any big runs. You're just looking to take some singles and doubles. Range-bound trading. So you want to buy at bottoms of support, sell at the tops of support. And you can see here, there's not a lot of great trades out there. There's just nothing. So without further ado, let's look at some of those not so great trades. I know. Look, I'm only going to take a look at one or two charts here because I think that's really all the market justifies here. And the first one I want to take a look at is dollar yen. Here is dollar yen, and I just want to draw some levels here because that's what we really want to do here is just look at levels and say, okay, these are where the support and resistance areas are that we need to be aware of. So we just need to draw some certain levels here. Move that up a bit. We're in the middle of this range here. So 134 to 136. That's really what we're looking for is this current range. At this point, we're right in the middle, so I don't have any clear call here on dollar yen. But what I do know is that when it gets down to this 134, 134.20 area, I want to start looking for a potential long setup. If we do rally early in the week and we rally up to 136, I will be willing to take a look at a potential short here on dollar yen. This is the kind of trading you need to do here, just range-bound trading. Identify the range and say, okay, these are the entry points I'm going to take. And if it doesn't get to any of those, you just don't make a trade here. So dollar yen is really the only thing I want to take a look at. Ankit, what do you want to take a look at?
I think I'll start with the dollar CAD. And again, that would go back to my original thesis. And if that is a correct thesis, and let's say if it does materialize, I mean, I like the fact that CAD took so long out of this downward trend that we have seen. We finally got that little uptick on that. So even though we did retrace today off of it, off the highs, I think this could just be a buying opportunity. As long as it stays above that 129, or, if you just draw that prior breakout point, which then becomes a support, if that support remains, I like this as a bull pullback opportunity. And remember, again, like I said, I'm watching this for early next week as well. On Monday, it's really going to be a key test for me if the CAD can actually reverse today's move. Today's move could be just a one-off move, but again, for Monday that'll be confirmation. So I'm looking at dollar CAD as that trade for it, and again, that would be something we can build up on if the CPI number comes out hotter than expected as well on Tuesday. So that's the one trade. I think dollar yen, like you just looked at, that looks great as well. I know a lot of the yen crosses, we can kind of make a case as a bear rally, but I think where we are right now, we just need to get a confirmation exactly where the yen's going to go. But I think if you want to just look at the opposite side, a lot of these yen crosses have come out very aggressively on the daily chart. So if you want to just pull up CAD yen, just for looking at any CAD crosses right now, CAD the yen crosses have kind of made a big dent, especially on the daily chart where we have given up that 50-day moving average. We've actually made we are attempting a nice little rally here. So the question is this just a bear rally, or are we trying to get above it? I think that 50-day moving average is really acting as a nice little ceiling over here. So what I'm looking at right now with a lot of yen crosses, like I said, I'm very open to looking at both sides because, I mean, we had a big drop from the highs to the lows. So I'm looking at this rally and I'm like, is this rally going to fail, or is this rally going to take us back to the highs? I think at this point, we can make a both case scenario. We are almost halfway through that retracement. So next week, I'll be paying close attention to these yen crosses. So, I mean, we can take a look at even CAD yen, Aussie yen. A lot of these yen crosses actually made a pretty big, ugly change of trend on these daily charts. So we got a nice reversal off the lows, and what we need to kind of see is, can we get back into those previous levels here? So I'm still entertaining the idea for a short if this rally fails. But like I said, for that I need confirmation. So next week, either we go with the dollar pairs or we go with the yen pairs. I think you need to um, just make sure you're picking the currency that's actually moving at that time. So a lot of confirmations that we're looking for next week to confirm which way it's going to go.
Thank you, Ankit, and I agree. Dollar and yen are the trades, and whether it's pairing them against each other or pairing them against something else, I think that's what we're going to see. So to wrap this up, we've got an equity market that's hit some resistance. We think it's likely to have a little bit of a pullback, but nothing real substantial. Currencies are flat. There's only a few things moving, and so whenever this happens, we trade less, not more. So if you were making 5 trades a week, let's pull it back to 2 to 3 trades a week, where you're really just waiting for the best one. And also be looking at range bound trading. I don't think you want to buy any breakouts or breakdowns. I think you want to be looking at ranges. I'll take a position here, I'll take a position here, and that's it. I don't think we're going to get any real strong trending action until the end of August or early September. So be cautious about that. Next week on the schedule, we've got the US CPI review. We're going to be sending that out on Tuesday to all of our traders, basically going through the CPI report, what's expected, and what are the potential trades off of that. Midweek update, our live session, where we join with all of our traders live during the day and look at trades. And then, of course, we're going to be, as usual, doing our currency room over the weekends. Everyone have a great weekend. Thanks for joining us. Goodbye, everyone.